In July 2023, your bank sent you a letter. You probably tossed it in the trash with the credit card offers and grocery coupons. But that single letter quietly announced the biggest change to American banking in more than 50 years. Not hype, not speculation. A structural transformation of how your money moves, settles, and is monitored, and almost nobody noticed. Because they packaged it as a routine service update. Think about the mail you get from your bank. Privacy policy updates, new fee schedules, generic disclosures. We've been conditioned to ignore it all because it almost never changes anything meaningful. Except this time, it did. This time, your bank was informing you, without actually telling you, that your account was being migrated off traditional private banking rails and onto Federal Reserve infrastructure. Most Americans have no idea what those words even mean. And that's the point. Let me show you exactly what happened. On July 20th, 2023, the Federal Reserve launched FedNow. To the public, it was presented as a convenient upgrade. Faster payments, instant transfers, smoother banking. But FedNow wasn't a feature, it was a replacement. Specifically, a replacement for the automated clearinghouse system, the ACH network that has been the backbone of American banking since the early 1970s. For more than 50 years, ACH handled paychecks, bill payments, insurance premiums, mortgages, business transactions, everything. And in one day, the entire foundation of American money movement changed. 4 days later, on July 24th, Webster Bank customers received a cheerful letter celebrating exciting improvements. Your account number stays the same. Your debit card continues working. Your direct deposits won't be affected. And you now have access to 41,000 ATMs through the MoneyPass network. Nothing to worry about. That was the distraction. Because buried deep in the attached disclosure, the part written for lawyers, not customers, was the real announcement. Your account will no longer settle transactions through private banking networks. Instead, every payment you make will now move directly through Federal Reserve master accounts, in real time. In other words, every dollar you spend, every payment you receive, every transfer you initiate, every bill you pay, every account you move money into, now flows through a government-controlled settlement system. Instantly visible, instantly traceable, instantly controllable, and it didn't require a vote. It didn't require debate. It didn't require permission. It didn't even require your awareness. Because you already agreed to it by keeping your account open. This is how financial control is built. Quietly. Technically, procedurally. With a paper trail so boring you never look at it. But here's the part almost nobody understands. FedNow isn't the end. It's the doorway. Because once your accounts run through Federal Reserve infrastructure, flipping them into a central bank digital currency, a CBDC, becomes trivial. Not a redesign, not a new system, just a switch. And the most dangerous part? The Fed has positioned itself to flip that switch at the exact moment a crisis gives them the excuse. Before we explore that, you need to understand what the old system actually looked like and why they needed to replace it. Most Americans imagine that when you send money, your bank moves cash from your account into someone else's account. That's not what happens. For decades, nearly every transaction moved through the ACH network, a private consortium run by banks with delays, buffers, and settlement windows. If you transferred $1,000, the money didn't actually move instantly. It passed through clearinghouses, then reconciled between banks hours, sometimes days, later. The delays were annoying, but they created friction, and friction protects privacy. ACH wasn't built for surveillance. It wasn't built for enforcement. It wasn't built for programmable money. But FedNow is. FedNow gives the Federal Reserve real-time visibility into every transaction across participating banks, which now includes the major national banks and thousands of regional institutions. Most people think FedNow is just a payment system. That's because the marketing was genius. Fast, convenient, instant. But the deeper purpose was structural. Create a single centralized settlement layer controlled by the Federal Reserve. Once your account flows through the Fed, your bank becomes an interface, not an independent institution. And once that happens, something dangerous changes. Your bank no longer controls your money. The Federal Reserve does, not in theory. In architecture, because when the Fed controls settlement, it controls permission. And the power to grant permission is the power to deny it. Now let's look at how and why this migration was engineered. The Federal Reserve didn't create FedNow because Americans wanted instant payments. If that were the goal, Private companies like PayPal, Venmo, Cash App, Zelle, and dozens of fintechs already provided instant transfers. The real reason was control. Under the old system, the Federal Reserve didn't have direct oversight of every transaction. They had influence, but not perfect visibility. FedNow solves that. Because, with FedNow, all transactions run through FedMaster accounts. Banks become access points to the Fed, settlement is real-time and government-controlled. The Fed can monitor every dollar instantly. The Fed can freeze or block transactions instantly. The Fed can program settlement rules instantly. This is the infrastructure required for a CBDC. And make no mistake, the United States has been building toward a CBDC for years, slowly, quietly, and with strategic messaging. Faster payments, innovation, modernization, efficiency, all very positive words, all hiding the same objective: total centralization of money. But the most important part is the pattern, because we've seen this exact strategy before. The blueprint: 1791, 1913, 1971, 2023. Whenever America transforms its monetary system, it follows the same sequence. 1. A technical justification. 2. A boring explanation. 3. A promise that nothing will change. 4. A massive shift behind the scenes. Let's go back. 1791, the first national bank, Alexander Hamilton, proposed the central bank. Jefferson warned the country, banking institutions are more dangerous to our liberties than standing armies. The public ignored him. The bank was created. Money centralized. 1913, the Federal Reserve Act passed quietly right before Christmas, sold as a way to stabilize banking. In reality, a private central bank gained power over the money supply. 1971, the Nixon shock. Nixon looked straight into the camera and said, "The strength of the dollar will remain what it is today." That was a lie. The gold standard was gone. The dollar became fully fiat overnight. But he said nothing would change. And most Americans believed him. 2023, the FedNow conversion. FedNow was marketed as a faster payment system. Banks said, your account number stays the same. Nothing important changes. But everything changed. Money rails. Settlement systems. Control. Visibility infrastructure. The same pattern, the same strategy. And the same outcome. A more centralized, more controlled, more surveilled financial system. But the real question is this: what will they use that system for? That leads us to Act 4. A central bank digital currency isn't just digital money. We already have digital money. Bank accounts, Venmo. Debit cards, a CBDC is far more powerful. It is programmable, it is traceable. It is blockable, it is expirable, it is permission-based, and it is fully government-controlled. Imagine the dollar with a thermostat. Imagine your money with conditions. Imagine your bank account. That can be adjusted. Here's what a CBDC allows: real-time taxation, automatic fines, automatic stimulus, purchase restrictions, location-based spending limits, time-limited currency, social credit-style rewards, instant account freezes. This isn't science fiction. China already runs a version of this. Europe is testing theirs. Australia and Canada are conducting pilot programs. And the United States is not lagging behind. It is preparing quietly by replacing the plumbing first. FedNow is that plumbing. The system is now ready. All they need is the crisis. And financial history tells us this: new monetary systems never arrive peacefully. They arrive during panic. Debt crisis 1913. Banking collapses 1933. Great Depression 1971. Inflation crisis 2008. Credit implosion 2020. Pandemic shutdown 2020. The crisis is not the goal. The crisis is the justification. And when the next crisis hits, whether it's recession, banking failures, inflation, or debt collapse, the solution will be a digital dollar to stabilize the system. And most Americans will accept it because they won't understand what they're giving up. The greatest trick modern banking has played is convincing the public that privacy and safety are opposites. If you have nothing to hide, why worry? Here's why you should worry. You don't need to have something to hide. You only need to have something they want to control. Privacy isn't about secrecy. Privacy is about sovereignty. FedNow eliminates privacy at the structural level. CBDCs eliminate sovereignty at the economic level. This is why Jefferson feared central banks. This is why every major financial transformation in American history leads to more centralized control. And this is why the July 2023 letters matter. Not because FedNow changes how you buy coffee, but because FedNow changes who has authority over the dollars you used to control. This wasn't a feature, it was a takeover. Quiet, technical, legal, and now complete. The next step is predictable. The timeline is unknown. But the direction is clear. Your money is no longer just your money. It's part of a system designed for visibility, influence, and eventually, enforcement. And the hardest truth of all? When the moment comes to flip the switch, most people won't realize anything changed. Because just like the letter you threw away in July 2023, the biggest transformations always hide in plain sight.